think we've got a nice start to the year for our panel. Bitcoin's off to a great start to the year. I think we're at 97,000 US dollars. I don't know what that is for Swiss franc, but between that, Stacks is having a great start to the year. Mara's having a good start to the year. Meltem asked a great question. Who is still mining Bitcoin and why? And I think we have one of the few folks that is still doing Lord Satoshi's work in Fred. And so I think what we'll do now is kind of focus on, and everybody in the room wants to know, is Bitcoin higher at the end of the year, right? That's basically what you all care about at the moment, I think. But the most interesting part for I think myself is, what does the future of Bitcoin look like? And so we have a really interesting panel, and I'll let them explain what their businesses do. But kind of to consolidate that, Mara buys infrastructure and equipment to use power to generate Bitcoins. You have created software infrastructure and equipment, in a way, to generate yield on that Bitcoin. And so I think, and Bilal, who can't be here today because in the spirit of our geopolitical shift, he signed a deal today for the government of Pakistan with a subsidiary of World Liberty Financial on a new form of payment architecture. So with that said, maybe just a quick dive into the world of Bitcoin today. I think the market generally had a bit more of a disdain for all things Bitcoin related last year. We had this crazy run with the world of digital asset treasuries, and then any miner who was not vocally pivoting aggressively into AI had to take it on the chin for a period of time. And I think that seems to be changing today. And I think for you, the conversations are becoming a lot more vibrant around, what do we do with all this Bitcoin now that's on balance sheet? As fiduciaries, as CEOs, you need to generate productive use of your balance sheet. And so how do we do that? So maybe a quick just tell us where you are with the business cycle with Mara, what you guys are doing now, what you're focused on, and then Muneeb, I'll ask you to do the same.
Sure. So if you think about Mara, we're one of the world's largest miners of Bitcoin. We operate 16 data centers on 4 continents. We see a couple of trends happening. One is, on the one hand, you have in the US a power-hungry AI industry that's trying to chase every single electron that they can find. Many of those electrons can be found at places where people have been mining Bitcoin before. Other places aren't as attractive, as I think Austin said. They don't have fiber. They don't have some of the aspects that are needed. However, that market is now shifted because people are willing to pay whatever it takes just to get energization that is available today. We get calls on a regular basis from people saying, hey, I want to buy your sites. Don't care the price, but you've got 300 megawatts, you've got however many megawatts running today. I'll buy it, tear it down, plug something else in. That causes some interesting thoughts at a corporate level. Meanwhile, internationally, you have countries where you have huge amounts of excess energy that is in need of power consumption or baseload that is curtailable, so intermittent, because their problem is balancing their grids. And you look, for example, in Europe, France, you have a huge amount of clean energy, predominantly nuclear energy, that the nuclear plants there operate at suboptimal levels. And they have a declining demand for electricity, but their problem is their grid is very imbalanced because there's so much renewable intermittent energy that hits it, and they need to be able to regulate that. And they don't have the thermal energy generation, think of it as gas plants, that allow them to do that effectively. You have huge amounts of power coming online in Saudi Arabia, Oman, other places, where they need curtailable load, which isn't really ideal for AI. And so there's a great market internationally for Bitcoin mining. And as you look at the domestic market, it's a world where you look at what's the maximum amount of profit I can make per megawatt that I have. And so that leads people to lots of interesting decisions. On the Bitcoin kind of treasury perspective, again, we're one of the largest holders of Bitcoin in the world. It's one of those things people say, well, why don't you sell at the peak and then buy it back at the bottom? I don't think the Bitcoin market would like it that much. But if you think about Bitcoin today, close to 15% of Bitcoin is held in institutions and is immobile, right? Which leads a lot to your business. And people want yield on that. It's not enough that Bitcoin appreciates in price 15 to 20 to 30 to 40% a year. People want to be able to generate yield. And so you have to have an active treasury management system to do that. because there is somewhat of a systemic risk to a Michael Saylor all of a sudden selling his nearly 700,000 Bitcoin, or some of these other DATs that have been created that now are trading below their MNAV, that are in problems, potential defaults with their debts. And so I think the Bitcoin market is kind of looking at all of these uncertainties, and we're sort of in a phase where you also have, as Jordi Visser said, we were talking about this backstage, Bitcoin had its IPO last year. It's when the original investors, the OGs, started all of a sudden liquidating their holdings, such that they're in a position where, hey, I have generational wealth here that's locked up in Bitcoin, and the market now can absorb $1 billion trade and not move. And so you had a lot of liquidation happening towards the back half of last year around that. And I think we're going to be trading in a bound somewhere between where we are today and the low hundreds for a while as this process continues to go on. And then once we break out of that kind of logjam of supply, it'll be off to the races and back up. But I think my big concern is if you lock up Bitcoin and you get to the point where 25 to 30% of Bitcoin is locked up, and just look at the gold market today. What's driving gold price has nothing to do with its utility or its consumption. It's all people not wanting to buy US treasuries and people just wanting to hold gold instead. And by people, I mean sovereigns. And so, Bitcoin will have its play there, but not yet. And I don't think you'll see sovereigns mining Bitcoin because of the Bitcoin rewards. The only reason the sovereign will mine Bitcoin for is so that they can be guaranteed that they own block space, so that they can't be censored.
Maybe take one more step of that.
Sure.
So when you say they're trying to guarantee themselves block space, why would that matter for a sovereign?
Well, so US is roughly 40% of global hash rate. Russia is roughly 13, 14%. It's come down. China is now at 11% and rising pretty dramatically. If you think about Russia and China, they need to trade outside of the dollar system. Stable coins are all dollar denominated. You have to have an on-ramp and an off-ramp. Well, the US just showed with Venezuela that you can take a stable coin, large stable coin consumer, and take them out of the market. And so now, all of a sudden, Bitcoin is a $2+ trillion market cap. You can trade oil in it, and you can trade outside of the dollar system. But if you're holding a lot of Bitcoin, like China does, like Russia does, then you have to be able to sell it. And imagine a world where Trump all of a sudden says, no US miner is allowed to process a transaction that is not OFAC compliant. That has happened before, right? 4 or 5 years ago. Senator Warren would love it if we could do that. So as a sovereign, you don't want to get locked out of the market. You want to have enough Bitcoin mining so your transactions will be processed.
Got it. So they want to preserve their part of the security of the Bitcoin network.
And just to put kind of icing on it, one of the president's mandates at the White House Crypto Summit that we did last year was that the US wants to have 60% of global hash rate. Well, why do you think that? It's so they can control it.
Yeah. So. And Muneeb, your focus this year is to push every holder, CEO, executive, large whale of Bitcoin to stop being lazy and start producing some yield on their Bitcoin. And you've been doing this since 2014. You've been building stacks and associated entities.
Yeah, so
right?
maybe I'll give a little bit background. Hi everyone, Muneeb, founder of Stacks. So I started in Bitcoin around 2013, built some of the early applications on Bitcoin. At one point, we were doing like 60% of Bitcoin's network traffic. The core developers were yelling at us that Bitcoin can barely do payments. What are you guys doing building all these other applications on top of it? I finished my PhD thesis in 2017 and then started Stacks. So what is Stacks? Think of that, some people call it a layer 2, but it's really the technical rails for Bitcoin on which an on-chain Bitcoin economy can exist, can thrive, can scale. Any feature that's missing from the base protocol, because the base protocol is not going to change. That's by design, right? Like that's actually one of the great things about Bitcoin, that it's very durable. It's not experimental. People aren't messing around with the protocol. They're not going to change it. It's very consistent and stable. But if you want any new features, let's say you want to be able to absorb more traffic, or you want some sort of privacy features, or you want to earn yield on your Bitcoin natively, you likely are never going to see those features at the base layer of Bitcoin. And there are a bunch of different sort of like these layer 2s or scalability solutions. We happen to be the largest by market cap or by number of developers or other metrics, and I'm sort of like proud to say that we're the ones that have survived the test of time. We're still here and sort of like growing. And in terms of our focus, one of the biggest things that we are focused on right now, so if you think of like Stack's North Star, is we want to see a thriving on-chain Bitcoin economy, meaning that people should be able to take loans against their Bitcoin in a decentralized way. They should be able to do payments that are very fast, very cheap, and all sorts of interesting applications devs can build. If that's the North Star, what's the first step? Like what's the thing that Bitcoiners are willing to do today? And I think that's where the discussion ties up with corporate or institutional holding of Bitcoin. That has gone up a lot. We all know about the BlackRock ETF, companies like Fred's company over here, MicroStrategy, and a bunch of other Bitcoin DATs that launched last year. They are now institutional holders of Bitcoin, and they're also public companies, like a bunch of them. So they are feeling market pressure to be able to generate some sort of income on their holdings. And they're holding, like in many cases, like billions of dollars of Bitcoin. And the technical challenge there, I don't want to go too much into the technology, but if you're wondering like, okay, if earning a yield on your Bitcoin was possible, why weren't people doing it before? The technical reality of it underneath is that Bitcoiners, generally speaking, are very risk averse, like the OG Bitcoiners or the general culture of Bitcoin. But even these large corporations, they're not going to put their principal at risk. In order to earn yield, they have to do something risky, where they're going over some bridge that can be hacked, or they have to go to some other network that's not Bitcoin, and adds a lot of like layers of complexity. So the biggest technical breakthrough that happened last year is Bitcoin can actually remain in your custody, in your cold storage, in whatever setup you have. If you use Anchorage or Coinbase, your Bitcoin can stay there, but the Bitcoin can now start earning a yield. And the yields are actually quite significant. So to put some percents and numbers on it, the yield could be as high as like 6-7% today. But in terms of numbers, our network has already given out $600 million of BTC in yield in the previous years. And only now we are sort of like scaling out the product and taking it out to large institutional players. And I think it's a pretty big...
Just interrupt. So it's yield paid in Bitcoin. So it allows them to compound their BTC. It's not...
It's BTC and BTC.
Yeah. Right. Versus other forms of DeFi where you're rewarded with a native token of...
Where your yield is different from Bitcoin. And Bitcoiners, just like from a culture perspective, they actually value any other asset far less. Right? They consider them like, risky things that might go to zero. And there's some truth to it, right? Like Bitcoin has remained the #1 largest asset for a very long time. So it's very important that the yield is actually in BTC. Mm-hmm. Let me pause there.
Yeah. And how are those conversations going? So there's, I don't know, roughly 24 reasonable, like material public Bitcoin holding companies. Do you go the path of going directly to the CEOs? Do you go the path of talking to Bitcoin OGs first because they don't have to deal with public regulators? Or do you go speak to the best activist investors and sort of, coordinate with them to push the corporate executives to do this?
Yeah, I think it's a mix. There are a couple of Bitcoin OGs who would never touch anything, right? And they're like, oh, this is interesting. Let me come and earn some Bitcoin yield. There are a bunch of public companies. Obviously, they are public companies. I can't disclose who they are, who are in the middle of figuring out their internals for how they can participate in this. Mm-hmm. And they will likely, the first versions of this, they're not going to take all of their holdings and do it. And I think they would do it if someone is holding like $600-700 million in BTC, they would do like 20-30 million worth of testing first. If that's working, and they'll see how the share price is performing, and they'll try to sort of like take it up a notch. But in general, you have to think of this way that staking is a native concept in Ethereum and Solana. Mm-hmm. And just between Ethereum and Solana, it's a $150 billion market. And Bitcoin is a far larger asset, right? It's like a 2 trillion asset, and we are effectively enabling Bitcoin staking, and we are running into capacity issues already, right? So there's some internal economics on how much Bitcoin can we even take on day one, and how it scales up, right? So that's in some ways, very interesting place to be, because just like with some of the AI stuff, that there's like a lot of demand, there's a lot of Bitcoin out there that's actually looking for yield. I think it's up to us, like how we roll it out and actually scale out the capacity and be able to do that.
So you got to move quick, Fred, if you want to throw your Bitcoin towards Muneeb. So I guess that's an interesting. So I guess again, to bring it back to the idea of geopolitical shifts. So you've been speaking with sovereigns, funds, corporate, public companies, and Fred, you obviously have been running Mara for a number of years. What are the options out there so you mine Bitcoin today, right? You sell some to pay off operational expenses, and then the rest of it you stack onto the balance sheet. You sit there, look at your balance sheet, you say, okay, we have these whales that are selling, we're probably going to hang us around 100,000 for a period of time. This makes sense to maybe overwrite some calls, because that seems to make the most sense at this point in time, versus maybe potentially a more consistent, non-market dependent model of working with a stack, for example, to get more perpetual yield, more defined yield. How do you consider sort of what to do with that large stack of Bitcoin that you have? And do you feel, are you getting pressured from the buy side, from the sell side, or whomever, to start finding ways to make that Bitcoin more productive? Or the other side, to sell it down into cash?
I think as Bitcoin was dropping, there were certainly some people saying, sell it and pay off your debt. But we have enough Bitcoin so that we have to take a portfolio approach to it. If you have 1,000 Bitcoin, it's really hard to portion it out, because you're not going to be interesting enough for somebody like Muneeb to want to even talk to you. So some of the Bitcoin we use to collateralize and borrow against for liquidity needs. Some of the Bitcoin we lend out to large, very healthy balance sheet companies that are looking to use that Bitcoin for things. And very rightly so, we don't want to lose custody of the Bitcoin. We need to ensure that any counterparty has a very, very strong balance sheet, where this is going to be a flea on their back, basically. Some of the Bitcoin we will put with third-party managers who have really good track records, and there are even nowadays fund of funds for Bitcoin managers. But again, it's a numbers game, right? With nearly 60,000 Bitcoin. If I give 5,000 Bitcoin to somebody, that is a huge position. It's a very large portion of anybody's AUM. That's in the Bitcoin managing business. So you have to portion things out in small little bits. And then we have an internal trading desk where we do a lot of trading. And because we're selling part of our production, our trading team also is focused on optimizing price. And covered calls is a great way to get some extra juice on your, you can get 1, 2, 3, depending on how the market's doing, % higher price than if you were just selling it in the open market. And there are still people, every now and again, you get a call, somebody saying, hey, would you sell me 10,000 Bitcoin? And it's like, okay, well, no, thank you. But so you have to do a bit of everything. But I think the market, we are going to see, I think in the next 2 to 3 years, a huge number of offerings. We're starting to see from the banks now that have become crypto friendly overnight. We're starting to see them become much more interested in custodial solutions and yield generating solutions, and deposit your Bitcoin with bank XYZ and you can borrow against it at 4.8% or whatever it is, with pretty low loan to value. But you're starting to see the market come to the place where you can really borrow against Bitcoin in the 6 to 8% range, very reasonably. And then if you can generate a higher return with that, putting it somewhere else. And I think just lastly, very key for us is we love getting BTC denominated yield, right? Because you can do some really interesting trades, even in a down market, where because it's BTC denominated yield, at the end of the day, if you want BTC, you're going to want that. Whereas if it was fiat, that yield would be decreasing, but because it's BTC, you get it. And then when Bitcoin swings back up,
that's music to your ears.
Yeah.
Because you think about all of I think it was first quarter of last year, when there was a massive the venture world, the investment world was going heavy into every Bitcoin yield, Bitcoin L2. Everyone was trying to capture that trend, and a lot of that is now, I mean, complete value destruction. And there's very few that are still standing. And you are accruing more and more of that with stacks. I guess from your standpoint, again, going back to this idea of parsing out points of it, and even as you overwrite calls, right? That's dampened the vol of Bitcoin in a very material way. And the more the sort of the Bitcoin yield market grows, sort of the more disrupted the vol market will be. And then from what you're doing, you obviously have capacity constraints as well. So again, you outsource some of that to third-party vol managers in some way, shape, or form. You were going to say something. So,
yeah, so the derivatives market in Bitcoin is bigger than the Bitcoin spot market today.
Yeah.
And it drives Bitcoin spot holders crazy, because you have people, whether it's perps or whether it's futures, you have all this arbitrage going on in the marketplace today. Sell futures, buy spot Bitcoin, then turn that trade around. You still have the Japan carry trade going crazy, where you're borrowing in yen, you're using that to buy Bitcoin, and then you're selling it. So, and that volatility around the fringes dampens Bitcoin's ability to spot Bitcoin's price to move.
Yeah. And so again, going back to that, do you feel the constraints in terms of how you look at your balance sheet Bitcoin from a portfolio standpoint? And then even for stacks, for example, do you have a capacity in mind? Is there a finite number that you said, okay, this is sort of our limits and that's our threshold and we can't really do much from there? Does it impact the yield opportunity for people that are participating? So you can increase the scale, but the yield will come down. Let me talk a little bit about that.
Yeah, maybe I can try to answer that. So this is a question we get a lot, that, hey, where does the Bitcoin yield actually come from, right? And that determines like what's the capacity of it. So the way to think about this is if you have the Bitcoin network and stacks is sort of like a layer on top of it, the way it works is the protocol is actually ingesting BTC as part of consensus. There are people who are bidding in Bitcoin to be able to mine a stacks block, right? So we're literally getting new Bitcoin into the protocol, and that's the Bitcoin that is used for the yield, right? And this has been running for years and on chain, as I mentioned, around $600 million worth of BTC has gone out in yield. So what's the capacity constraint? I think capacity constraint is really the size of the network. Stacks is trading around slightly below $1 billion right now. And depending on how much sort of like a block of stacks is worth, meaning the gas fees for all the economic activity and the Coinbase rewards, like that's sort of like, how much yield we can support. So it's around like 6-7% if stacks is at a billion and there's a bunch of Bitcoin coming in to earn it. Right now we can roughly support, call it $1 billion, $2 billion in BTC. But that's purely our markets function, right? What is the leading Bitcoin rails worth? I think the market will figure it out. But if you look at a Solana, the reason why the 6% yield in Solana is actually $6 billion a year is because Solana is close to a $100 billion network. Mm-hmm. And I think the real question is going to be, and that's where the economics of this was super interesting, and we are releasing a full economics paper around it, that we know for a fact that there's a lot of Bitcoin that's actually looking for yield, right? Like I would guesstimate that around $100 billion of BTC is in, institutional hands that's actually looking for a yield and probably more. So when that Bitcoin comes into the network, there is direct value accrual to STX, right? Like I almost view this as like staking capacity, meaning that staking capacity is more in demand and a lot of people are willing to buy staking capacity. So as they're buying staking capacity because they want yield on their BTC, you're actually driving up the value of the network. And then at some point there's a market clearing price, right? So if it was 50 billion worth of BTC that wanted yield, or 100 billion or whatever, and we've actually seen early signs of it. So one of another project in this space called Babylon, which actually launched something similar but with some key differences. They didn't have, in my mind, the value accrual system built as well. And B, their yield was in an alternate asset, right? People want to earn BTC yield, and I think that's very, very fundamental. But they were able to show that 55,000 BTC, which is around $6 billion, came in very quickly looking for yield, right? So if you get the value accrual part right, and as that 6 billion, 10 billion comes in, the value of the network is actually responding to it. I think then you get into the flywheel effect that then the market clearing price would be depending on how much Bitcoin is looking for yield.
I think another thing that drives demand for yield is Bitcoin price appreciation, right? If Bitcoin is growing at 30, 40% a year, 4% more is not going to really do a whole lot. But if Bitcoin is only growing at 15% a year, 4% is a significant enhancement.
Yeah. And I think as you see other public entities being listed or different structures, like the pref structures for MicroStrategy, they almost have to get to a point of liability-driven investing, right? They're promised certain yields. They can obviously change those, but that would impact the price. And so
effectively what Saylor's doing today, right?
Yeah.
It's a fixed income investment, right?
Yes.
You buy a share of stretch, and you get 11%. The current yield is 11%.
Yeah.
Right.
Maybe that's the play. Just tell people they need it. It's liability-driven investing. It's asset management 2010 all over again. Okay, so geopolitical shifts. Let's go back to that. So two things. We'll talk about risks in Bitcoin. On a lovely horse carriage ride last night, we ended up speaking about, I'm going to get to that in a moment. We ended up speaking about quantum computing and some of the potential impacts and implications on Bitcoin and Bitcoin's encryption. So I want to maybe shelf that for a second. The one that always eats at me, and just thinking about my long-term Bitcoin holdings, is actually on the mining side, so the security of the network. There's an unrelenting growth in global hash, right? And so, you have the halving every 4 years. You have a doubling of hash every year, and you get, obviously a material decrease in profitability unless the price truly increases significantly. And then you have governments around the world and entities around the world that are mining at, highly subsidized levels. So my view, and please correct me if you think I'm wrong, Fred, particularly, is that the U.S. government will have to step in with subsidies for the industry to be competitive long term. And if not, and a lot of that power shifts to jurisdictions that are not sort of U.S. friendly, how does Bitcoin remain a potential sovereign reserve asset for us?
Yeah, so the U.S. consumes at its peak and generates somewhere a little over 1 terawatt of energy, and but its average use is about half that. And I may be wrong on the math, maybe closer to 60%. Duke University did a study last year where they basically said that the whole AI industry in the U.S. needs 40 some odd gigawatts of power, and there's 70 gigawatts of power available if it were intermittent. So you want to solve the demand for energy for AI, make it intermittent and able to respond to grid requests, then I think you don't need more energy. Right now, there's a huge race for energy in the U.S. The U.S. government simply has to talk to energy utilities and say, listen, I know you're trying to maximize the value of every megawatt you have, but where you do have a need for intermittent energy, price that lower, which is effectively the way the market works today. But in some places like PJM, this is maybe getting a little exaggerated, right? And so that would give you actually reason to still mine Bitcoin. But I said 4 years ago at Mining Disrupt that either you're a power company and you're mining Bitcoin with your excess energy, or you're a Bitcoin company that is owned by or partnered with a power company. And so you're using excess energy. And I think that is the future of Bitcoin in the US, is you're essentially going to have relationships where you either own power assets, and we own wind farm, we own flare gas. We announced late last year that we're going to build up to 1.5 gigawatts of gas-fired generation together with MPLX. So you have to either own generation capacity or be owned by a power company. And outside the US, the energy companies are very interested in bringing Bitcoin mining in-house through partners to be able to deal with their intermittent excess energy. Right? So they have a supply problem where they don't have demand for that that's flexible, and they want to solve for that. But they don't want to have to go through the brain damage of being a builder of data centers, operator of data centers, and taking Bitcoin risk. And so there's some really interesting things internationally. So at the sovereign level, I think, again, in one of the conversations I had with somebody last night, it was the belief was that Bessent is going to get the order from Trump that buy Bitcoin by the end of this year. It'll be go buy a bunch of Bitcoin. I think the U.S. has lots of other ways they can generate Bitcoin without having to go out and buy it in the market. Yeah, not just through their energy partnerships. But
I'm sure there's a poly market on that.
Yeah, there is. But sovereigns, for example, the sovereigns view Bitcoin as two things. One is it's an interesting store of value, and you're seeing sovereigns accumulate it. I think early on IBITS, post IBITS launch, you saw a European fund buy $500 million of Bitcoin like that. And so you're seeing a lot of sovereigns collecting it, but they may have 2-3% allocation to it. But if you do have power and you can mine Bitcoin with it and you can utilize it, that must be the cue that I'm talking about. Then
it's the 5-minute warning.
Then they're going to do it if they can find somebody who's willing to partner with them. And you're seeing in the Middle East, for example, Oman, Saudi Arabia especially, they have lots of excess energy. They built huge amounts of energy for the hydrogen market. The hydrogen market hasn't really developed, right? And so that energy is all now available because they can't sell it.
Yeah. Okay. I'll get to this. The crowd question now. We're sub 5 minutes, and that is the protocol for our panel. It's been upvoted twice, so good job whoever asked the question. Why have so many Bitcoin ecosystem meta protocols and apps failed? Do tokens, for example, BRC20, runes, ordinals on top of Bitcoin matter?
Yeah. So I think the way that I think about this, the framework is that when people figured out that these smart contract chains like Ethereum are useful and there's some scalability work or other sort of like work required, there was tons of experimentation, right? Like so many projects got funded and everyone's trying their own designs and their own paths. And that's sort of like how free markets work. And if you look at the last cycle, Solana is kind of like one clear winner. Like it's like 10x bigger than anything else, whichever metric you pick, like market cap or usage or this and that. So I think something similar happened on the Bitcoin side. You mentioned that 2 years ago, a bunch of these projects got funded, and some of them tried different designs, this and that. And I think Stacks is kind of like that 10x bigger sort of like project that's emerging in the relatively smaller Bitcoin ecosystem space. Was all that investment into experiments bad? Well, no, that's how free markets work, right? Like we don't know which ideas are going to work and which ideas are not going to work. People are going to fund a bunch of things. And frankly, even my project is actually learning from some of these things. Like I just mentioned Babylon, right? Like Babylon got traction in a certain dimension and we look at like what was the shortcomings and maybe we can do better in those areas. So I would just consider that purely a free markets function, and that's how they mature and consolidation starts to happen and technologies mature that way.
Yeah, I think part of it is Ethereum has clearly captured, and Solana being an L2, right? In that sense, Ethereum has clearly captured the financial industry, and so TradFi is clearly building in that ecosystem. The EVM is a very important component of that ecosystem, I think, and it allows you to bridge and do all sorts of great things that it's harder to do conceptually for a lot of people in the Bitcoin world. But Bitcoin has all of the potential capabilities. It's just a question of people wanting to invest in it. And the question is, does Bitcoin want to be a transactional medium, or does it want to be essentially a fully decentralized storage medium? And by that, I don't just mean storage of value in Bitcoin itself, but a record holder that is decentralized and can't be revisited or rewritten. And I think one of the big drivers of L1 usage going forward is going to be essentially Oracle data for AI systems, right? How do I know that this is actually real data? How do I know this is true? And you're going to see AI systems doing much more, having much more dependency with blockchain systems for transaction verification, for validating data, things like that. And we're going to see use cases for blockchain systems that we haven't really thought of yet.
And I guess we talked backstage about, recently this being Bitcoin's IPO moment. So the changing of the guard, the changing of hands of early investors who are now, selling their Bitcoins into the hands of new holders and sovereigns and investment management firms and the like. So do you believe that is the case? Do you think this is is it the sort of strategic moment for Bitcoin, and is it their IPO moment?
Well, clearly, when Bitcoin crossed $100,000, people who had bought Bitcoin in the hundreds of dollars or in the single-digit thousands of dollars had huge, generational wealth creating opportunities. And you also had, market liquidity that let you dump $1 billion of Bitcoin, and it didn't move the market. And so people started selling off some of their Bitcoin. Some people contributed in kind to ETPs, ETFs, because that was a tax-free deal, and then you can borrow against it at lower rates. And other people just wanted to do estate planning. You have people who are kind of getting up into my age category, and you've got kids and you've got grandkids, and you want some certainty in that estate plan, and you have a huge concentration in Bitcoin because that's what you believe in. Well, maybe you sell 10, 15%, and you get liquid with that, and you create your family foundation and do all that sort of stuff. And I think a lot of that started happening over 100K, and will likely continue to happen.
Yeah, and while it stays static, they can, hopefully use stacks to earn some yield on top of it. And I guess we're up on time. Just one last question. The call about buying 10,000 BTC from you, was the individual's initials DJT? You can wink.
No.
All right, with that, we're wrapping up here. Thank you very much.